All right, hey guys. In this video, I am going to be covering silver futures, but here's the thing. What I'm going to cover are basic Elliott wave principles. I just happen to be showing you this on silver. These principles you can use on whatever instrument you are trading. Okay, so that's the deal. Let's dive into the silver chart through the lens of Elliott wave. All right, so here we go, and first thing I want to talk about is this 5-wave move down, which we call a standard impulse. One of the rules in Elliott wave is that wave 4 may not encroach upon the price territory of wave 1. The reason that's important is if price comes up and cannot get above the price territory of wave 1, and you are in the context where you would expect a reversal, which is what we were looking for over here. We started getting the reversal. If that reversal is going to continue, price, the first clue is price going to get above the level of wave 1 or not? In this case, it did not. So the more price ran into this resistance, and can you see this blue box on my chart, which is the measurement for a wave 4? And my thinking was, as long as it stays below the level of wave 1, I'm going to keep my mind open to price making one more low, and we measure for that. In addition to these supply and demand zones, one of the things I love about the Professor Trades Club, which is where I highly recommend, if you're watching this on YouTube, that is the place to be. Professor Armando is expert at creating these zones. So I've borrowed his teachings, I've learned his teachings, and now I include those on my charts as well. Very simple. Here was a zone over here, and all I did was drag it over to the right. Same with this zone right here. I dragged it over to the right. Now, the zones that are usually in this red color, for me, those are the Armando zones. And the other color, like the blue, is almost always me looking for a wave 4. And the orange is almost always me looking for a B wave. Anyway, you will learn these things the more you watch my videos. I'm very consistent with the colors, and I'm consistently measuring for the same things over and over again. So the more you learn, the more you'll understand. The more you watch, the more you'll understand. Ask me questions in the comment section, or if you're inside the Professor Trades Club, send me a DM, can make a comment on my chart, ask me questions. All right, so back to my original thought, which was looking for a 5-wave move standard impulse down. Now, this bounce right here, I mean, I could talk about any number of things, but I'm just going to guide us through this conversation, talk about the structure, kind of demonstrate a few measurements for you guys, and then leave you with my final thoughts on silver. But these principles and techniques, measuring techniques that I'm showing you right here, they're yours to learn and apply to whatever instruments, stocks, futures, commodities that you want. I can't get into it right now, but certain instruments translate better, are easily tracked with Elliott wave. Other instruments are less easy to track with Elliott wave. Sometimes commodities follow Elliott wave really nicely. Silver is kind of hit and miss, but I understand silver after years and years and years of trading it and mostly holding it, going all the way back to before like 2009, 2010. So that's why I'm always focused on silver. So anyway, as I was saying, this 3-wave move down to here, and you've got this bounce. So the way we measure for a bounce, if we have already seen 3 waves down, we want to measure the first swing high and first swing low that occurs after this bottoming area. And so I took my clues from this bottoming area from a couple different things. One is these yellow fibs, and the second is Armando's zone that I've learned how to draw down here, this red zone. So not only did price come down and wick into that zone, by the way, look over to the left. Okay, here it was definitely not wicking, but you can see that price was interacting with this zone. And then over here, it came down again, and this is where you see the wicks, right? This is only a 34-minute chart, but it doesn't matter. If you're a scalper looking for an entry, you're paying attention to wicks on a 34-minute chart. You could also pay attention to wicks on an 8-hour chart. Different view. So I drag these zones over. In fact, I just noticed I hadn't dragged this zone over. This zone seems to be a little less impactful, but at the same time I say that, you can see that this zone, depending on how meticulous you are, price is coming into the general region of this zone if I drag it over. But the zone I prefer is my more sophisticated, more detail-oriented zone of the wave 4, which is almost always going to be between the 236, the 382, and the 50%. And that's what these blue fibs are. Let me make those brighter so you can see them. So after you see a 3-wave move down, if you are thinking that it's possible for this to be a standard impulse, you should be measuring for it as if it is a standard impulse, because then you're looking for it to invalidate the idea. And the way it would invalidate, if this were a standard impulse, it would be invalid if this wave had broke the level of that wave 1, which I've made kind of a big deal about it on my chart, which is 49.66 in the continuous futures contract for silver. Okay, so price did not get above that level of wave 1 before it made a new low. Now what I'm looking for is I'm looking for it to come back up. So now look, I've gotten ahead of myself. Let me back up a step and show you, once this has made 3 down, I'm looking for a bounce anyway, because it came down into these yellow fibs, which is good enough for a 3-wave move. You don't really know where any wave is going to terminate. I mean, the market can do anything it wants. But what I do is I use Elliott wave to give me context. So this came down in 3 waves, and the way you measure that, you get 3 clicks on the fib projection tool, and that's what I use to create these yellow fibs. So the first click goes at the swing high, which is way up here, right? That's click number 1. Click number 2 is the bottom of the next swing low, and the next click is at the swing high. So it's 3 clicks. You got the high, then you got a swing low and the next swing high, and then you're projecting these yellow fibs. And the way I do that, I'm going to open the settings so you can take a screenshot. When I'm looking for or measuring for a 3-wave move, I'm looking for the 100 fib, the 1236, and the 1382. Those are the primary areas, fibs rather, that I'm looking for in a corrective structure. In other words, for a 3-wave move. I'm looking for the 100 fib, the 1236, and the 1382. So the price here came down, just wicked below the 1236 and started bouncing, came back down, could not make a new low. So now now that I just showed you how I measure for 3 waves on the way down, guess what? I'm going to measure for the same thing. So is this going to be an impulse on the way up? Meaning, is this just a 3-wave correction down into this zone and it's done? Well, the first clue to this being done would be if price had gotten above the level of wave 1 to the downside, right? So 1, 2, 3. I don't know if it's a wave 4 at the time. I don't know if it's a wave 4 at the time. All I know is it came up and made this local swing high and made a local swing low. So I'm going to get out my fib projection tool, the one that gives me 3 clicks, the same one that I just showed you I use for these yellow fibs. I'm going to come over here and I'm going to put the first click on the swing low, the second click on the swing high. Sometimes I got the magnet on because I'm a bit of a maniac of trying to get it exactly to the penny, because I'm always amused when price often does go right to a fib to the penny, and when you're using Elliott waves you'll see that. Okay, so this is 47.18.5, and just for the sake of brevity I'm going to drag this over. I may not get it on exactly that level, but it doesn't matter, because for the sake of this video it's close enough. I got it to within a penny. Now I have these fib projections saved as templates. Okay, so in this case I'm looking for a 3-wave, correction, okay, which is going to be A equals C, and that gives you the 100 fib, the 1236, and the 1382. And you can see that price has come up, come down, and then now come up and just exceeded the 100 fib. Actually, I see this almost all wicks. So it wicked above the 100 fib just as it wicked below the 1236 fib here to the downside. It wicked above the 100 fib. So I always use yellow fibs when I'm looking for a three-wave move. Okay, so in this example, this is quite compelling that at this moment it got rejected from there. Now you don't know if it's just going to come back down a little bit and then advance. Okay, but once you get more familiar with making these measurements over and over again, it takes a long time to get comfortable and quick making these measurements. I like to use templates so I'm not constantly adjusting my fibs. So the point is, a wave 4, great majority of the time, is going to be a three-wave move. It can be a much more complex move for sure, but in this example, it's 3 down to here, it's 3 up for what I'm calling a wave 4, and if I think it's a wave 4, I'm now looking for a 5-wave move for wave 5. So what we have here is 1, 2, 3, 4, 5. So in other words, wave 5 in white, right? The white Roman numeral in parentheses, wave 5 should be subdividing in 5 waves, which it does. And the same rules apply. So if this is wave 1 right here, then in purple, I hope you can, let me see if I can make this brighter. In purple, the wave 4 should not encroach upon the price territory of purple wave 1. Yeah, just going to make it brighter. And not really. All right, I just made it a little brighter for you. Okay, so this is wave 1, and you can clearly see, if I put this horizontal line at the price level of wave 1, the purple wave 4 does not break the price territory of wave 1 to the downside. So you have 1, 2, 3, 4, 5. So, and there's another one of Armando's zones down here. All I did was drag it over. You know, did I know that this zone was going to be in play going all the way back to the beginning of October? Now it's in November. No, I didn't. But that's the way price works, because price has memory. So you drag these zones over. You're going to get good at drawing zones too, especially if you're in the Professor Trades Club. The link is in the description of this video, by the way. So price comes down, completes, I think, 5 waves inside of the 5th wave for a total of 5 waves of the larger structure. We call that the larger degree structure. So you have a 5-wave move down, and now price is bouncing. Now it gets complicated, because after a 5-wave move down, you're expecting to see some kind of correction, just like we saw a correction over here. And just like, I didn't talk about it, but just like we have a correction here. Now look, just for the sake of continuing education, let's measure this bounce, okay? Because typically a correction, we're looking for the 100 fib, the 1236 fib, or the 1382 fib. And if it's on my chart, it's going to be in yellow. So I'm not going to use a magnet just for the sake of brevity, but usually I use a magnet because I want to get it exactly on the penny. So there's a swing low, okay? There's a swing high. And let me put this bottom line right on that swing low right here, okay? And, well, look at that. Just wicked above, it wicked above the 100 fib. Opened the next candle and then dropped and never got back above there again. And this came down impulsively, just like I was talking over here, that there's a 5-wave move inside of wave 5. The 3rd wave should have also a 5-wave move inside of it. And I can see that. You could think of this as 1, 2, 3, 4, 5. So inside of wave 3, you should be looking for a 5-wave structure. Okay, but the real educational value I'm showing you is these corrections, these bounces up, are tagging the 100 fib 2 in a row. The wave 4 wicked the 100 fib, and the wave 2 wicked the 100 fib. Amazing. Perfect example of what I'm trying to teach you. Here it is in real time, in real life, in current events, right there. Okay, so now we get into this complex wave. So we're expecting a correction, and once this came up, now it's like, okay, well, what is this thing doing? Well, what it's doing is it's probably shredding traders that aren't expecting and looking for a correction here, because after 5 waves down, I'm definitely expecting a corrective wave, which means it can move in threes or sometimes more complex than threes, like a series of threes that are interconnected. This is taking a long time already, I would say, which has me thinking this is not a standard price action. So if you go back to a larger degree, now look, I could talk for a long time, but I don't want to. But I have to just give you as much context as I can for educational purposes. So I'm hopping over to the 8-hour silver chart. And based on the context of this entire move up, I don't think this is all the correction you're going to get. That's exhibit A. This is not enough of a correction, meaning it needs to come lower because of the overall size of this move up. You wouldn't know that, but that's just something that I'm thinking from my years of experience. So, and also the other thing is 5 waves down does not indicate the end of a correction. 5 waves down is an impulse, which suggests some kind of a correction and then a continuation. Well, guess what? You know where you can have an impulse and a correction is an A wave. And you know where you can have this level of complexity and nothing standardish? That's called a B wave. And after an A wave followed by a B wave, you should expect a C wave. This is more reasonable, where you might expect, I'm going to have to redo those fibs because I set these fibs before this structure completed. I longed it, and I'm still holding a small size long. But anyway, but the main point I was showing you is the idea. Let me just put the labels on here. The idea that I'm showing you is this is just a bigger correction, where this could be an A wave, and a B wave really should come up, at least to the 618, but a great majority of the time you're going to see a B wave come up and exceed the 618 and get into the zone of, or at least approach the 764 or even the 886. So this is why I am looking at the 34-minute chart and thinking this is a B wave. And the way this price action is unfolding in here, once you've done this long enough, B waves are variable waves, as are waves 4. B waves are difficult to count, they're difficult to measure, and they can be composed in a lot of different ways. But all I do is measure stuff. So inside of this B wave, it very well may be unfolding as a 3-wave move. And I know I might be driving you crazy with these labels, but once you know how to do something and understand the concepts, it's repetitive. Which, thank goodness, it's repetitive, because that means you have a chance at nailing some trades over and over again. So this is the concept. I'm kind of going ahead of myself here and putting the labels on just for teaching purposes. So B wave, as I was just saying, looking for a B wave to come up to really the 618, usually at a minimum. Doesn't mean it's always going to do that, but that's just a guideline. 618 to the 764. Well, look where this correction pulled back to, right in between the orange 618 and the 764. So if that is the case, and this is what I put on this chart last week, after you want a C wave should be composed of 5 waves. So if this is the initial wave 1 of C, which, by the way, should also be composed of 5 waves. It's arguable at this scale. By the way, the smaller scale you get, the less reliable it is. That's why I always look at the 8-hour chart and then bring your view of the landscape from the 8-hour chart, bring it down to the lower time frame charts to actually trade. And by the way, this is the same thing Armando teaches exactly with his zones. You make the zones on the longer time frame charts and then bring that perspective down to the lower time frame charts. Okay, so in any case, we have a bounce up. I'm calling that an A wave, which is, I think it's a 3-wave move. 1, 2, 3. And then this move down, which is rather structureless. You could argue it's 5 waves down. B waves generally aren't 5 waves, but this is a very messy. Look how overlapping and janky this is, whereas as opposed to like an impulse. Now these are impulses to the downside, but do you see how this looks? Just the look of this wave. This looks like an impulse, meaning it's covering ground. It's covering ground. It's netting motion to the downside. Net. Right? Whereas this, yeah, it's netting motion to the downside, but it's overlapping itself the entire time, which is not reflective of it being an impulse. That's my point. I know I'm hitting you with a lot of information in this one video, but this stuff, it's going to add up over time. If you just keep watching the videos, keep learning, and you will start to get a feel for Elliott wave, and you'll start to just look at a wave structure and at least have an idea of what it's not, because disqualifying what it might be is one step closer to figuring out what it is. So anyway, A, B, right down in between the 618 and the 764 for this B wave. And then once it topped out here and came down, I put this gray zone on there, and I told everybody in the room, I'm going to add to, because I scalped it, but I left a runner on it. I said I'm going to add to the runner if it comes down. So I did. I'm still small though. So now I'm holding longs, and I really don't want to see it come back down into this area down here again. So of course the market doesn't care what I want. So, and the idea is if this is an A, B, then you see these yellow fibs over here. I have already measured for them. So the first click, by the way, this is the 3rd time in this video I'm showing you the exact same fib structure measurement. 3rd time using the fib projection tool, which gives you 3 clicks. The first click goes on the swing low. I'm calling that the bottom of a 5-wave move. The second click goes this swing high, which I'm calling an A wave. And the third and final click goes at the bottom of what I'm calling a B wave, in between the 618 and the 764. And then I'm looking for the yellow 100 fib, the 1236, and the 1382. So interestingly, regarding C waves, great majority of the time are composed of 5 waves. Now, you understand what these yellow fibs are. You understand what these orange fibs are, right? Because these orange fibs are the orange fibs that I took from the 8-hour chart, which show you a general target area for a B wave, which is going to be 51 something, which, okay, the 764 is right here at 5181. The yellow 1382 is in the same region. And if the C wave is going to play out like it does a great majority of the time, if it really is a C wave, it's going to be an impulse. It's going to be a 5-wave impulse. And then we're expecting a termination somewhere in this zone up here, and then a reversal that'll blow your hair back. And on the 8-hour, then we'll measure for that. We'll use the 8-hour to measure and come up with targets much lower for the final move of this downward correction. And then we're expecting one more move to the upside in silver. Yes, one more move to the upside. Who knows how high, but we'll measure for it. But just a guess, looking at the 8-hour chart, ABC, I have to do some measurements, but if that's wave 4, this thing, yeah, you could see, well, it depends how low it goes, but you could see upper 50s, 60 in silver after this corrects. But right now we're not talking about that. We're talking about downside right now, not upside. Well, local upside in advance of what we think will be I say we, just Elliott wave guys in general, are looking for a deeper correction. So if it's a C wave, it should be composed of 5 waves. So these white fibs right here is me measuring for the impulse. And the way we do that is we use the same tool, but we use a different template. So I'm still getting 3 clicks, but I'm using standard impulse fibs, which just for simplicity, we'll use the 100 fib, the 1618, the 200 fib, and the 2382. But really for this purposes, I'm looking for where do these white fibs, which are measuring the impulse that would be the C wave, where do they typically target? Well, an impulse typically targets the 1618 fib to the 200 fib. Are there extensions? Are there muted fifth waves? Are these variable type of fibs? Of course, yes. They are guidelines, but it's extremely helpful because you're going to see why over the next coming week with silver. If this continues to go high here without making a new low, my expectation is that at a minimum, it's going to make it to this 618. And you know what's interesting, and this is what I love about Elliott wave, once you know how to measure stuff, there are basically 3 fibs unrelated to each other that are measured for and created independently of each other. But they are all right in this, I would call that a tight area. It's like 30 cents or so. So that's one area you could see some resistance. So if you're just purely a scalper, I'm trying to swing trade these things lately because I'm not on the screen. You've noticed I haven't been making as many videos. My time is seriously limited. I'm still trading, but I don't have the time to cover all these other instruments just temporarily till the end of the year. So, but I am going to get back to making videos once a week and trying to just educate. Okay, so we have a fib cluster, if you will, right here, and another one above. So I like silver based on this initial move for it to just keep coming and get up. We should know more by how it interacts with right in this area. Another thing I'll do, meaning if it just slices right through this area and the first resistance is up here, then I'll expect it to pull back somewhat and then get one more high. Okay, and terminate somewhere in this zone up here. And then the game I'll be stalking shorts, but I'm getting way ahead of myself here. So one little additional bit of information. I know your eyes might have glazed over by now because it's just a lot of information. But when you're looking at a standard impulse, it's helpful to select the 618 and the 764. Okay, and that you're going to find that zone very often creates some resistance in a standard impulse. And I got to tell you, now I didn't put that on there till just now, but you got to admit that is resistance, isn't it? So now I have a template for that, which is kind of like gray and it has the words Elliott wave pivot. So I don't like my charts to get too cluttered, which is funny because it already is cluttered. But you know, this is like homework. So this is kind of a homework chart. You're watching me do homework in real time. So I'm not really cleaning up the chart. But I take off the 618 and 764 fib because I just know when I see, anytime you see this zone on any of my charts, you know that that's what it is. So the idea here would be price gets above this pivot. It already tried once, got rejected. That makes sense because this is kind of like a wave one. And by the way, Elliott wave guys already know this, but you quite often see a wave one terminate in the vicinity of an Elliott wave pivot, which you don't know that at the time, but you can see it in reverse as you're looking in the rearview mirror. So it came up to what we now know is a 618, 764 pivot, got rejected. Came up a second time, same zone, a little bit higher, made a new high, got rejected. Wicked it, came back down. Can't make a new low. Now it's going higher again. So my expectation actually from over here is that we're going to end up over here. So the next area that you would expect wouldn't be unreasonable to see some resistance is this 100 fib right here. Now, what is this 100 fib of? Pop quiz. What is this 100 fib belonging to? Oh, that's right. I'm not live, so you can't answer me. So the 100 fib is associated with the measurement of this impulse in white, these white fibs. So if this is really a 1-2, and then now this is another 1-2 of wave 3. Wave 3, it would be very reasonable to, let me put the labels on here so you can see it. It would be very reasonable for wave 3 to make it up into this area. Oh, I must have double clicked somewhere and put the, oh yeah, I put the 3 down here. Double click. All right, it's just, let me just delete it and make another one. So the idea is, now these are just the labels. I'm not measuring anything. If that's wave 1, this could be wave 2. Wave 3 would be expected to reach higher. And then wave 4 should hold the 100. I'm not predicting anything. I'm just showing you a tendency that Elliott wave is very good at highlighting. And so it's very possible, wouldn't be unreasonable at all, to see this internal move. See, wave 3 in purple, right, should be composed of 5 waves. Just as I showed you over here, that this downward wave 3 is very likely composed of 5 waves. So this wave 3 right here should be composed of 5 waves as well. So we might already have wave 1, wave 2, wave 3 will come up here. Maybe this would be the perfect place to hit some resistance, get a little shallow wave 4, pull back, and then one more shove up for wave 3 of 5 of C. That's how you say it in Elliott wave nerddom speak. All right, so that's the idea. We're finishing off this corrective move, which we're thinking of it as a C wave, and we're looking for a 5-wave move up into this resistance. Do we know exactly what? Look, we don't know anything. These are just guides. These are not predictions. Do not make the mistake of looking at this stuff and going, oh, well, dang, okay. Brad said this is going higher, so I'm just going to refinance a house, take out the home equity, and put it all on silver futures right here, right now. That's not how you trade. That's horrible risk management. The reason Elliott wave is so effective is kind of like a computer code in a way. It's like if this, then that. It's an if-then program. So if this doesn't make a new low, then wave 3 is still alive. The potential for wave 3 is still alive. It already made a new high above wave, what I'm thinking of as wave 1 of C. It already made a new high. And it got a correction, but it did not make a new low. So what does that say? Well, look how simple we can keep it. Now that if you're still with me, awesome. I know I'm saying a lot, but check this out. Here's a swing low. Here's another swing low, right? So you have a swing low, you have a swing high, swing low, another swing high. That's 3 up. You're expecting a correction, but you do not want to see it make a lower low off of the main low. And it didn't. And then it came up, it made a swing high, it made a swing low, which did not make a new low here. And now it already made one new high over this high. And it has not made a new, on this move up, it did not make a new low here. So here's another way to say all of this. Here's a swing, here's a low. Here is a higher low. Here is another higher low. Here is another higher low. Now, could this come back from here and make a new low or wick this low? Yeah, it could. I would prefer that it doesn't, because it would really keep the standard impulse idea for wave C intact if this does not make any new low from here and makes it all the way up through this resistance. It could rattle. I mean, if you're a scalper, all you need is 5 cents trading silver. Look for a silver short scalp from somewhere around this zone. I'm not doing that. I'm holding my longs, and you want to see price come up here and complete this structure. All right, so I've given you a lot. Fibs, fib confluence, right? The larger structure are these orange fibs looking for a correction up into this zone. The yellow fibs over here are a more exacting way to measure the yellow A, B, C correction. This is my review, by the way. The video is about to be over, so this is my review, right? The orange ABC is following these yellow fibs right here. And then the third and final set of fibs are these white fibs, which is me tracking the C wave, which I'm tracking as a standard impulse, which is wave 1, 2 is already in place. And these white fibs are the projection fibs where you can look for clues. Like wave 3 very often comes up to the 1618. Wave 4 very often does not come down much below the 100, if at all. And then the final and fifth wave very often targets the 200 fib. That fib happens to line up with the 1382, which happens to line up with the 764, it's not impossible for this to top out here. So knowing me and the way I manage risk, I almost always take, if not all gains, the majority of gains at the 1618. If you're in the club for any length of time, you've heard me say that a lot. I take the gains at the 1618. So my plan is, if I'm lucky enough to see price get up here, I'm going to take off half of the position. And then if it comes back down and holds this and does not encroach upon the price territory of this wave one, then I very well may add it back and just looking to squeak out a few more squiggles higher. Okay, so that's the trade plan, subject to change based on price action. All right, so that's what I got. I know that's a lot. Thanks for watching. To the Professor Trades Club is in the description of this video. If you liked it, I appreciate you giving me a like, subscribe. There'll be more of this coming, usually once a week. The real value you're going to get, aside from these videos, is joining the Professor Trades Club. Cannot recommend his club highly enough. It's a total steal. I mean, it's totally a steal. When you go there and click the link and see the price, you'll be amazed. It's worth every penny of it. That's why I'm there. And that's all I got. All right. Happy trading. Ask your questions in the comment section. I will reply. Take care. Bye-bye.